For a long time, gold has been an asset that Indians have bought, both as a hedge against inflation and also as a safe haven. India buys about anywhere between 700 tons to about 800 tons of gold every year, out of which most of it goes to jewelry, and the balance is put into coins and bars. Internationally, gold has been used as an asset across different European markets, or if you see China now has built a very large exchange. The World Gold Council recently came out with a recommendation about what should be the gold policy that India should follow. It's a great document in which they have made a whole bunch of recommendations about how India could build a gold bank by allowing different banks to actually allow to sell gold to retail customers. They are also recommending that you allow for a gold spot exchange where consumers can actually buy and sell gold and various other derivative products of gold. We are the second largest buyer of gold, but we don't have any influence we are not the price maker. What the World Gold Council in its report is recommending is that India gets a seat on the table. If you look at the world debt today, we have about $188 trillion of debt. To put that in perspective, the world GDP is about 76 trillion. So the world debt today, world debt is a mix of government debt as well as private debt. $17 trillion of government debt are actually earning negative rate of interest. Essentially, people are so nervous about how the economy is going to do in future that they are going and flying to safe havens like government bonds. Essentially means that the future looks worse off than today. That is the market sentiment as of now globally. That is not the case in India. In India, we still have interest rates and repo rates in the positive zone. The US Fed Reserve actually cut its rate recently. Now, what is happening because of that is that there is a lot of money actually chasing assets which are not very high yielding assets. That is leading to the stock markets everywhere reaching its all-time high. But this might not remain in the future. Cheap money which is chasing a lot of assets, which could lead to asset inflation, which we are seeing in the stock market. But the problem with cheap money is that it does not help growth, it does not help productivity. So the overall economy doesn't really benefit by loose monetary policy. So to most of my friends and family and to people who know me, I am now advising to move 10% to 15% of their money into gold because 2020 and 2021 will be difficult years. You should start buying gold now because the gold prices are beginning to spike.